in a time where we're seeing certainly less cooperation on global trade and international issues more generally, what's your outlook for our ability to continue to have a productive dialogue in terms of international financial regulation?
So I think we're responsible for the United States policy, and that's what we look after. We don't look for opportunities to criticize our fellow regulators, but I would say generally there's been a lot of progress around the world on these matters. International financial regulation is critical because markets are global, many of these companies are global, financial activities generally are global, and so you need some form of you need a place to meet and agree on common standards so that we can trust each other's regulation and supervision. And that's what we have in the form of the Basel Committee and other forums, the Financial Stability Board, where, for example, we agree on sort of broad parts of the regulatory and supervisory framework, and then we go back to our home countries and we implement it in the context of that country. And I think that works. I also think I think the United States remains strongly committed to being an active and constructive participant in these international regulatory forums. I would point out that my colleague and Vice Chair Randy Quarles was just named head of the Financial Stability Board, which is probably the senior post in this area in the world. And so that's great, and I think it shows the United States is still committed and engaged strongly in these forums because they're essential. We can't just look at domestic regulation anymore. We have to have a level playing field. We've got to be able to trust each other's different countries' regulatory and supervisory schemes. So that's, I think, something we're still strongly committed to.
For my second question, I want to come back to the issue of instability. Do you think that when the next downturn comes, it will be caused by the effects of instability in the financial sector, particularly a downturn in equity prices as long-term interest rates rise substantially from where they are today?
So thank you, Marty. As I mentioned, I don't see vulnerabilities as elevated overall today in financial markets or in the financial system. In terms of what, business cycles don't last forever, unless you're Australia, where they're in year 27 of their expansion, which sounds like forever. So I don't know what it'll be. Often there's some exogenous event that nobody sees coming. When I was in the government before the Iraq War happened, and I think that was a big part of the recession that happened in the early 90s. And then 9/11, was probably part of the trigger the next time. So I don't know what it'll be. I don't. I think our job is to try to conduct monetary policy, supervisory and regulatory policy to keep the economy close to our objectives and sustain the expansion. Are we done?
We could go on and on.
No. Thank you.